Welcome back. Here with us on Closing Bell. Our next guest is Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer. Rupen, thank you very much for joining in. It's now turning out to be a good year for the Indian market because we've broken out of this consolidation range. You tell us, given the big run-up of 23 and these new all-time highs, what parts of the market still look investable to you, and which are the areas where you think maybe some profit-taking perhaps would be called for?
Yeah, hi, good afternoon, Surabhi, and Happy New Year to you and your viewers. Yes, no, it's always a good feeling when market is at its all-time high. And on a lighter note, any growing economy, market should always be at its all-time high, right? But having said that, what has happened over last 2-3 years, the market has corrected a lot of anomalies. So some of the sectors which were very highly valued, say at some 2-3 years back, say private sector banks, or even for that matter, consumer staples, they have corrected and now their valuations have come down to reasonable level. At the same time, the segment of the market which was extremely valuable, from various metrics, was completely ignored. And that segment has really rallied in last 3 years. So be it public sector enterprise or some of the other segments like utilities, energies, which was completely ignored. So that kind of has stabilization has happened. With that perspective, at an all-time high levels, probably if you look into both the macro and the micro, clearly India is better placed. From a relative sense, the segments of the market which has value is definitely large private sector financials, because they are trading at a valuation which is much lower now than its historical average. And in every sector, there are pockets, wherein some bit of mean reversion will happen. But at a overall level, financials and as a segment, large caps and mega caps as a basket has better value than mid and small caps. So that's how we would want to position the portfolios.
All right. Hi, Rupen. Good to see you in. Nigel on this side. Missed talking to you the last couple of times, but wishing you a cracker of a year ahead in 2024. Rupen, I recall two themes that you all were quite bullish on. One was, I think, two-wheelers. Second was US generic pharma. Now, the issue is that you get on right. You make money. The problem is, when do you get off? Do you think both these two themes, they've played out, or do you think they still have some room going ahead?
Yeah, after Nigel, and you have very rightly said, it's like Hotel California. We need to know also when to take profits. So here, two-wheeler, the entire thought process was that for like 4 or 5 years, the volumes of two-wheelers was quite suppressed. So a lot of pent-up demand was there. And plus, I think on an average, after 6 to 7 years, two-wheelers also requires a replacement. So a lot of the replacement demand was also there, which was not happening. So some bunching happened, and plus some bit of recovery we have seen in the rural side. So we have seen in last 2-3 months the volume pickup has been really good. But what happens, from a stock market perspective, the markets are always fast and furious, right? So there was undervaluation. Probably that undervaluation has got corrected. Now the big question is that segment now overvalued? Probably not. So because the earnings momentum will be there this quarter, the numbers would be pretty good, and for next 1 or 2 quarters, the momentum should continue. So probably it will perform. Two-wheelers, it will perform in line with the markets. I think same story goes with the US generics as well. So we had market looks at the incremental rate of change, and probably 2-3 quarters back, what we also called out that the overall pricing pressure on the US generic side is close to, if not bottom, but that incremental impact was not happening. And the stocks also, while there were some one-offs, some a blockbuster drug was there in a lot of generic companies, which led to higher growth. But at an overall segment, the earnings were good. Probably this quarter also, we believe the overall earnings growth of US generic focused companies will be upwards of 15 to 18%. But it is now getting into fair valuation zones. So to answer your question, Nigel, probably will wait for 1 more quarter and see how it pans out, and then take our call whether to take money off the table or not.
Rupen, what about on large cap IT? No bad news is good news. The market believes the worst is over. But are you convinced? Because in our last conversation, I think you had told us that the up move that we're seeing in IT is more tactical. There is no fundamental basis, explanation, justification for the up move. And you had in a way recommended that maybe money could be taken off the table when it comes to IT. So how are you approaching the numbers that we've seen overnight and the rally today?
Yeah, hi Reema, you're absolutely right. Tactically, IT, if you see incrementally both the companies which have come out with their numbers, it's just market like what I said about US generic, right? At some point of time, people discounted that, okay, now that fall will not happen and incrementally the thing should be positive. I think similar is what market is right now expecting. And plus, IT is actually now working out as a leverage play on the US interest rates. In fact, the previous month, the reason for rally in IT was because of the expectation of Fed pivot as well as expectation of soft landing. So everybody is right now going by that premise that there will be soft landing in the US, which I think the first quarter number of the US GDP will be out in sometime in April for us to figure out whether there is a soft landing or not. But overall, now valuations of some of these large cap companies, are 25 times on FY 25-26, and it is no longer cheap. And today's move is purely, it's just there was positionally, I think in the Infosys, probably the positioning was, there were a lot of short was there, the build-up was there, expecting bad numbers, so the numbers were not bad, and hence some bit of covering is there. So at least in the near term, probably it is definitely at a fair valuation zone. But markets are funny, you never know, right? When the market wants to make something overvalued, it does make it. But right now, we definitely don't see value in some of these names.
Oh, yes, we know. There is no greater force than the force of money. And today that force is definitely with the IT sector. Rupen, just, leave us with some thoughts on the discretionary side, because if there's one trend that remained very strong through 23, was the rise of discretionary consumption. And we saw that play out on real estate stocks, went through the roof, a stock like Titan that continues to rise even today as we speak. So, A, do you think there is still merit in riding some of these themes? And if yes, then what part of discretionary consumption are you, relatively comfortable with when it comes to valuations?
So, Surabhi, the overall play, what has worked in the Indian market, and that is what we are seeing in the numbers, is the not only discretionary, but on the premium side of the market. So the premium consumption has been pretty strong, right? And if you see, so Titan or some of the other jewelry companies are clearly posting very strong business updates. So that trend will continue. And I think one major force in the market, which we all are aware of, but probably we can't articulate, is this the wealth effect, which, because thanks to the buoyant capital market, which we are seeing, I think intuitively people do spend more on expensive item, taking into consideration their potential mark-to-market gains, right? And say 10 years back, the number of participants in the markets as a percentage of our overall population was pretty low. Today, as we speak, we have 14 odd crores demat account which are there. We have 16 odd crores of mutual fund portfolios which is there, and the entire, assuming majority of them would be invested into the equity market, I think that wealth effect also will come into play. So the what you call the premium consumption, so that can be linked to any company, probably, as I said, jewelry is one, tourism is one, which we are very positive. Airline industry will do well. And also within segments like, say, on the apparel side or on the, say, footwear side, the companies which are focusing on higher end of the segment will do well.
All right, no points taken, Rupen. Good conversation as always. Appreciate you joining in. Have a good weekend. We'll see you back soon again here on the channel. Thanks indeed.